Hello guys, glad to have you on board again today. We'll follow up on yesterday's video and try to update if new things have been showing up. We'll start with the cryptocurrency sector first and having a look at the daily chart time frame. So yesterday's been closing at the low. The market has been trying to make a breakout and we'll see this one in a 2-hour chart time frame. We have it right here. Just give it a second to plot. Alright, so we tried to take that bearish breakdown, and to be honest, I tried to take this one as well. So I've been shorting right at the candle close, hoping that we will just get there by the end of the night so I would be able to secure the trade. I was quite surprised this morning to see the market reversing with a blue triangle, even though the momentum isn't confirming at that stage. So in terms of 2 hours technical, and remember what I've been saying lately, that the technicals must somehow remain in a second stage in the background because we're working very aggressive price area. We're long-term traders or fighting short-term traders, which means technicals may be some kind of messed up in a short-term perspective. So what we have in here is obviously messed up. We have the exit signal in here confirmed by the momentum, so we've got everything we need to focus this to be a potential bottom. The problem is the market is failing to break up resistances even though we have no sellers in here. We clearly have a very tiny weak bearish cycle, which means in here it was like free cake for the bulls to just get through this. They failed doing it. We've made a bullish, double bullish signal in here, the blue triangle and momentum confirmation, and we've been breaking through this one during the night. So I kind of felt, okay, bulls had their shot, they didn't take it, so we might be able to reverse and have the bearish breakdown I was expecting. But apparently it isn't the case, so we'll see about that. I have a few technicals that I will relate on this. It's the fact that first one, if for some reasons tonight or today the candle was about to close at the low, not breaking yesterday's high, I think we'll have high probability to have a breakdown right by tomorrow. Option number 2, we invalidate by making a bullish engulfing of yesterday's bearish signal, and in that case I think the bulls might be able to take over, just taking away the stop losses, and mine included, of course. You know, I mean, I've been a buyer of Ethereum, so I've been selling some Bitcoin speculatively via CFD contracts just to some kind of hedge the position. So if we go up, this is not necessarily a big deal to me. Obviously that's even a good sign for the Ethereum's buyouts have been making. So it's kind of, I'm trying to figure out what the market is about to do, either going lower and breaking down supports on the Bitcoin to trigger another bearish burst on the altcoins, or if the altcoins are about to take it over and Bitcoin rebouncing out of that support once again. Second thing, an important thing in here is that we haven't made a lower low, and this is pretty much important. We haven't broke down to those levels, which means if we go up for another bullish run, and if for some reasons that bullish run was about to overcome that previous resistance, that will be a sign that the market is just bullish. Once again, remember the rules in a bearish market, in a crashing market, is that we have to make lower lows every time and not making higher highs. So if for some reasons we're making higher lows and higher highs in a row, that means the crash is over, and that we'll have to forecast the Bitcoin have probably holded up its 6,000 level and probably going to have to be ranging before getting bullish. Once again, we're not going from bearish to bullish. We'll have to range first, but probably this might be the range. So if we go there and break that up, I'll be ready to focus on bullishness in the near to long term for Bitcoins. But right now, I still remain in a slightly more chances to go to the downside, even though it is not something that is done so far, but we've got a neutral momentum that is searching somehow to reverse into a bearish cycle. If we just do it, I think we'll have everything we need to just break down that support. So I'm slightly shorting the Bitcoin, but very, very tiny. And as I said, it's not the time to speculate. So I've been going on this evening knowing this will be risky, and this was kind of a 50-50 scenario. So if I have to surrender the stop loss, I'll do it. If I trigger the trade, then nice. I will hedge the positions I have on the Ethereums that obviously will go to lower levels, but I'll take a tiny gain in Bitcoins, giving me some cash to buy extra altcoins afterwards. So this is how I see things right now. It's kind of If we go down on the Bitcoin, there is some kind of short-term speculation that could be at play to just push the price downward and make the breakdown of 6,000s, or we just fail it one more time, and then the altcoins and the entire cryptocurrency sector will just pull out of problems and just get off the support levels, reaching out to resistances slowly, bite by bite. So we also have to figure out something, and if you want to understand what's at play right now, as I said, it's long-term buyers versus short-term sellers. And we've got leveraged short-term retail traders right now, which means the long-term buyers might be just thinking that this price is viable enough to buy, and they will just buy the short sellers, and at that point they'll have the volume they're seeking for. It's what I've been saying. Smart money is never, ever buying under resistances. They're buying supports, and we're obviously on a support right now. The question is that support reliable enough for the smart money to buy or not? If the smart money wants to have better prices, then they'll just let it go and let the price go to the downside to buy those better prices. And in that case, they will buy the long-term buy and holders stop losses. Those who've been buying with leverage will be stopped out by prices going below 5K. And these are the losses they will probably like to buy. On the second position, second option, if they find the current prices viable for long-term investment, they'll simply buy the short-term sellers. And those who are selling with leverage right now will just be feeding the smart money, who will just basically buy those sells. And the market will not break down the support and will obviously break down resistances again. So it's kind of a 50-50 scenario. The question being whether the smart money thinks those prices are viable to buy or not. And to be honest, I'm no smart money, which means I don't know, and when I don't know, I don't trade, or I don't put leverage. So I don't have a strong conviction on the actual market. I'm just basically in a wait-and-see approach. I'm long-term buying versus eventually short-term selling when I have signals, and I thought that bearish breakdown during the night was kind of a valuable signal, but just to be straightforward in here, for now, it's not a good choice. It's probably going to be a stop loss. So anyway, talking about your other cryptocurrencies, obviously same bearish move on the Ethereums, and these are pretty damn fucking weaker. We'll see about that, but it's basically like the Bitcoin market is trying to figure out what's at play, and the other altcoins are just suffering and being put down to misery to see who's going to survive, and that was just the plan. Basically, I bought the Ethereum, and as I said, we could pretty much go below 200. I wouldn't necessarily be surprised. It's just that we're going to test the resilience of buyers. Are you going to be resilient? As I said, to me, Ethereum will just be going to 0 or 1,000, and until they manage to do one of those two options, I'll do just nothing. So I'll just wait, and this is what I'm doing. So I'm going to buy and hold my Ethereums, even though we're going lower. That's not a problem. I'll just eventually take some short entries on the Bitcoin that has some bearish potential, because if we had to break down supports, then I might want to take a little additional money by just selling some Bitcoins. But not with leverage, not with a lot of conviction, and I wouldn't risk more than $100 out there, which means if I'm stopped down on the Bitcoin, it's going to be a tiny loss, and it's going to be a gain somehow on the other altcoins. So it's kind of, as I said, mixed scenario, as what's at play right now is really long-term buyers versus short-term sellers. It's hard to say who's going to win about the current supports workouts. So moving on regarding the general asset classes, and what we have in here is rebounds from the Chinese indexes from making a bullish engulfing. We'll see how the candle closes will be for the US indices today. The only one that is in red is the FTSE, and we're going to talk about this one as well. But I don't think the indices have done the job already. I think this is just a taking profit pattern, which means the bears are getting out slowly but steady. I don't think we're nearly close to bullish at that point. The problem is still being the US stock market, overpriced, damn fucking dangerous, yet everyone thinks this is going up forever. And we have big dangers ahead, multiple dangers. First of all, we've got Donald Trump. It's already there. It's kind of the biggest mess the market could face. Anytime the fucker is opening its mouth, we have chances to go losing 10%. So it's just, at some point, the fucker is going to do something he shouldn't do. It's going to piss off the market, and we might have another fucking sell-off like we had at the earlier stages of that year. It could very well be just the same. I mean, as I said, it's an on-off switch. We don't really know if the switch is going to do, or if we're about to switch or not. But if we have to be switching off, then you can be sure the market will just follow it. It's going to be an instantly reversing from bullish to bearish, and everyone will try to sell at the same time. So it's basically, it's a binary market. We don't really know what's about to do. The bullish potential is very limited. The bearish potential is enormous, but the market doesn't want to do it as long as it doesn't have reasons to do it. So we're just basically waiting for a market catalyst. And as I said, we've got Trump in the background, who's the worst ever catalyst. And if for some reasons the market is disappointed by Trump at some points, it will just fuck him up and go reversing. So to me, the plan is still the ongoing plan, which means on the SPX we've got those two options. We no longer have the range option as we are reaching out to historical highs as we speak. The problem is that at some point, whenever we'll get there, we'll have two options. Either things do great, we have no problem, we just fuck up the volatility to get to the big short area, which is right here. Second option, Donald Trump's messing around, the market doesn't like that, and for some reason we have a bearish catalyst and we just fuck him up, reversing. This is the November 9th, which is midterm elections, and once again this will be the big game changer. If we didn't have that, I wouldn't necessarily be aggressively shorting that market, simply because everyone is forecasting that year to be pleasant, to be great, to be without problems, low volatile, bullish. We'll have nice gains on the 31st December. I don't nearly think that this is going to be the case. We've got multiple dangers down the road. First of all, we've got Donald Trump can make shit at any time. We've got midterms election, which is going to push him to do the shit that could reverse the market. So it's basically wait and see right now. But if something goes wrong, I obviously want to be into the reversing side. It's just kind of a wait and see approach right now. As long as the market wants to go up without volatility, I just let it go. If volatility shows up at any time for any unexpected reason, I'll obviously get in. So it's kind of a waiting to have something to play with. As the current time, nothing is viable to do it. It's just the market is dead, and it's bullish dead. As we've got nothing to do, but as we have share buybacks and things like that can enjoy the market, the neutrality is a neutral. The neutrality is always bullish, which means we are basically neutral at that point, but we're neutral bullish, as no one wants to sell and no one wants to buy, but we have share buybacks. So when we have no buyers and no sellers, we'll always have buyers, so we'll always go slightly higher. So this is the only reason. So you see who the market's buying, clearly Apple and all that shit. It's basically the worse and the shittiest you are, the more you'll be bought. So this is how the market is thinking right now. Obviously nothing close to rational trading in here. So don't think, just wait is the only rational approach right now. The only market I'm ready to buy at that current stage is nothing close like the big names and things like that. I'm buying the Russell just to hedge and take some gains. Because I think if one market on the US has to be bought, it's obviously this one. And this one is a gainer to me. It's going historical highs, and I think this one has pretty decent chances to go there. We could have another pullback, so for some reasons the stop loss must remain below the previous double bullish signal in here. But I think that market has pretty decent odds to just go bullish. We've made that triangle in here, A, B, C, D, E. As you can see, the D point could just be there, and the E point could just be here, which means we could already be in the fifth wave. It's wave 1, 2, 3, 4, 5, which means we got some nice potential in here. I'm not targeting more than that, and just to be clear, this is what I'm targeting. So I'm taking wave 1 as an extension in here, down to the wave 4 bottom, and I'm taking wave 5 target. Which leads me to believe that we're not gonna go that high. I'm going to take the 61 extension. This is first taking profit area to me. So watching closely for this, and in here I think the Russell might need to require a taking profit, and if things do great, just a partial taking profit. If things are dangerous, just an entire taking profit. We'll see where the SPX will be by then. So it's kind of a wait and see approach, but if I have to buy something, I would really much buy the Russell more than the rest of the big names who are just shitty bubbles like Apple. Don't want to be a bubble buyer because you don't know when the thing is going to burst. And as I said, we've got Trump bullshitting each and every day. It's got the pressure of the midterms election pushing him to do some damn fucking business, tweeting and trying to get some votes. But obviously the danger is for him to just put some shit out there and just piss off the markets. And if it's about to do it, then you can be sure of something: the market will always win. And if the market wants to put Donald Trump out of the board, you know how they will do it. They basically sell off brutally to make shake off on the investors, who would just make all the Donald Trump dreams going out. It's basically Donald Trump is the guy who's been making Wall Street going up. As I've been clear on this, Wall Street's just laughing at the guy. The guy is just a bullshitter, and everyone in Wall Street knows about that. So the thing is that if we have to dump Donald Trump, this wouldn't necessarily be our problem. We'll basically dump the guy in a very, very simple way. We're just going to make the market go losing 10 to 12% in a straight line. It will create some kind of panic, and everyone will doubt about Trump and put the light on the guy, and he will take care of the rest. It's just stupid enough to fuck it up. So don't worry about that. As long as the market is going up, Trump is well appreciated by everyone in the US economy. Anytime the problems will be there and show up, you can be sure it's going to mess up and do some usual shit like it's always been doing during its entire life. So moving on to see how it goes with the yields. So yields are going up. I'm still buying the yields on the euro area because I think this is where we've got the strongest upside. I could buy the 10 years yields on the US economy, but I'm not. Because I might fear some kind of bearish potential in here as well, and I don't want to be a buyer in here. Problem is that China is trying to sell some T-bonds, and the Fed's trying to fight it. So it's just kind of a dick battle out there, and nothing I like to be trading in there. So I'm basically out of 10-year yields and T-bonds, but I'm into 10-year yields of German economy and selling the bunds. So anything else we can just forecast? Yes, the junk bonds have been changing courses. We're back to resistances as expected. The market is bullish. So this is clearly forecasting that Wall Street is going to make new all-time highs. As the risk is pulling off, VIX is down, junk bonds are up. So we're probably going to have to break up that resistance, get to the next resistant area, which I think this is where problems will be ahead for the US economy once again. So I'm just waiting for the next risk area in which I'll be playing my game again. So wait and see. Right now I'm letting Wall Street just go ahead until we have no further catalyst and no other reasons to do otherwise. We're straight into August, which means it's generally a very, very uninteresting price period. So what's happening right now is just until we have something to deal with, something unexpected, the market is just going to be dead bullish. So slightly bullish, but bullish dead. So it's not something that we're going to make a 10% move out of it. It's just going to grind our way up 0.5% by 0.5%. We can make a 1% day at some point, but we're going to have to retrace this one afterwards. So it's just going to be a dead market, slowly grinding its way up like a zombie, and waiting to have something to really price out. And as I said, I think Donald Trump is the problem out there. He's pretty much going to say shit over shit during the summer, and at some point I would like to see some shit that disappoints the market. Regarding the gold, still going to the upside. I have no problem on this one. I've been buying long term, but down the range bottom, and I hold that trade. Same thing goes for silver. I've been buying the long term support. So both those assets shown double bullish signal, especially the silver. So I'm pretty damn fucking confident on this one. It's still early stages, which means it must remain speculative leverage, way too early to get into leverage trading. But I'm basically waiting for the market to find a resistance. Don't necessarily know where it's going to be. We could go up there in just a few days. That wouldn't necessarily be a surprise. It's just that I don't know, but the market has a resistance in here. Obviously in here, so we broke a double bullish. So we broke double bullish. We've got a resistance in here. We could just be there in a couple of weeks. Wouldn't necessarily be a problem. It's just I'm waiting to have a resistance, a pullback, and then whenever I get to break that resistance, I'll get to validation and leverage trading. I'll have strong targets for silver just as the gold. So this will be long-term calls. It's not something that's going to produce the gains in a couple of weeks. It's going to take months to get there. These are basically recession covering trades. We've got pretty cheap gold and silver to cover up for a potential recession, and I think at that moment everyone is just doing accordingly, just buying some gold, buying some silver just in case, and then we'll manage the risk on the way up. US oil, I'm watching closely for a potential bearish trade, but I'm just waiting to see how it goes. I've got double bullish in here, and I want to see a market closing below that level and breaking down that double bullish. So if we go there and breaking it down, I think we got a pretty damn bearish trade to make. But at the current time, it's still too brutal to get there. So I'm just waiting to see how things plays out. USD MXN, interesting pricings, very interesting pricings in here. We're working around that triangle. It's hard to say if this is a B wave with an A, B, C, D, E, which means if we terminate this and break up a resistance, I'll get out of my bearish entries in here, but I still forecast that double bearish, that single bearish to go, no, it's a double, yes. As you can see, we've been making a squeezing pattern, and as usual, squeezing pattern is a confirmation. So we've been squeezing out there, squeezing to the downside. So I pretty much see us see the market probably going a little bit lower. We'll see about that. If we're going lower, this is where I'll take my partial gains, entire gains. And if we go there, I'll short again. But for now, I still remain speculative. We've got the Fed tomorrow, so we could have some pretty damn nasty moves out there. The one that is worrying me at the current time is AUDNZD. We've got the market catalyst during the night with the RBA. Basically, the market just did nothing with it. So we're kind of dying below resistances, creating double bearish signals in here, and not the best ones. It's a bear to exit. It's not something I like. I really don't want to see the market breaking down supports and installing trends in there. I don't want to have a replicate of this, otherwise we'll go very lower, and that wouldn't be something I like. We shouldn't get there. We should just hold the resistances, taking over the overlap in here, which means we could just go there, making a tiny trap to just go there, for example. I don't want to see the market going lower than that. Otherwise, it will be flashing red to me, and I'll have to take partial gains and reduce the leverage on AUDNZD. I remember you guys that I'm leveraged in here, which means the number you've got in here is multiplied by 7 to my account, which means if we had to go lower than that, which a minus 1%, I don't want to take a minus 7% drop on the account. So I will reduce the leverage if necessary, but for now I don't see any reasons to do it. I'm just waiting to see the market breaking up that resistance. Clearly this is a resistance, and now I want to see the market breaking it up to restore and go leverage 8, which is the maximum I want to get to regarding the AUDNZD. USD CNH, I'm waiting for a pullback in here to get to reinforce the trades as well, and waiting for confirmation. So I'm waiting for us to build a support in here, getting in there, making a lower low, and then breaking down the support. And if we do it, I will target the lower areas of that pitchfork. Is basically going there, finding some sellers, creating a downtrend channel, and getting to the down channel and breaking it down, get to the targets, and take the profits for that retracement. This is a retracement target, so basically 1, 2, 3, 4, 5, taking profits entirely, waiting for retracement, 1, 2, 3, 4, 5, taking profits entirely, and getting bullish on USD CNH afterwards. GBP USD, pretty damn fucking strong on this one. I thought we would make a resistance out there. We don't. As you can see, we had the double bearish in there. So the market created a resistance, fucked it up. So this is a bullish signal in here. And we've got bullish signal. We were up to the target, and as I said in here, I kind of reduced the leverage I had. I took some partial gains in here, just waited for a pullback. Actually, it was losses because my average price on the GBP USD is just right here. So I've been taking partial losses just to reduce the leverage I have in here, the exposition, because I think the market could just make a pullback. But that's just to be really straight in here, I'm buying every damn fucking pullback on the GBP USD. I think we terminated the trend. We already had the final impulse in here, wave 1, 2, 3, 4, and extended 5, which means we're going to have a V-bottom structure. Possible V-bottom structure. Once again, it's nothing close to be 100% sure. We've been testing 61% retracement, and I think that's fucking far enough for this to be bearish. So we'll see. I kind of expect we could have another bearish trap just to kind of break down, chasing some stop loss below there. So stop loss must not be set right in here, but slightly below. As said in here, 1.26 is a nice level for the stop loss you could put on GBP USD. Don't be surprised if we just go slightly lower, find out that technical extension, which is 61% of the first bearish impulse in here. Could just go there to fuck up the sellers, and in that case making wave 1, 2, 3, 4 and 5, and just terminating here, flushing all those who've been putting too much risk in that market, and then going bullish. So don't be too aggressive, but really be bullish in here. To me, we've been fucking up with we've been messing around with that damn GBP for too long. This is obviously going to reverse, and as I said, the moment we'll reverse, we're not going to stop. So I don't yet know if we're really reversing. All I know is that we've been breaking bearish signals. Doesn't necessarily mean that we're strongly bullish, but at least right now we're no longer bearish. So we're either we got to range in here and make an additional tiny wave 5, but we're not gonna go further than a lot further than that. Probably not gonna go there anymore. But the problem is we have to wait just to make sure that we're not trading against an ongoing trend. That means we'll make a new lower low after dipping the market. The EURJPY, I've been reinforcing my bearish entries out there, and the market just proved me wrong at the moment. But anyway, I've just been shorting that resistance. I said I'm shorting even though I have no momentum confirmation, which and I've been clear on this. I totally allow the market to just go slightly higher, trying to trigger some momentum exhaustion pattern. But we've got everything we need in here to be bearish. We kind of made a we've made a double bearish. We try to break it up, go into that resistance, so it's either we're going to go up there or we're just going to fail in here and make a bearish engulfing and bearish reversal. It would just be a fake outburst just to go slightly lower, just to go even lower afterward. The thing is that we just made a taking profit pattern. Doesn't give me a lot of confidence that this market is bullish. More likely that this market will have one more bearish impulse before getting into further issuing. I don't see the market making a double bottom structure in here. So it's kind of a wait and see, but once again, you know the drill. The problem is that EURJPY is an asset that is obviously negatively correlated to US indexes because they are pulling pressure on the euro and putting pressure on the yen to just try to go as high as possible in Wall Street. But I think the problems in here is just that we're ranging a bit to go slightly lower, finding the bottom areas of that trend channel. So I'm remaining bearish on the EURJPY. It's just that the market can mess a little bit with me and go slightly higher. Anyway, I've been taking nice gains on the bottom, so I'm just reinvesting those gains in the market, and I see no reasons for us to go higher than that. So it's just either we'll react there or there. So I've been putting a reinforcement in here, and I'm ready to put another one in here as well. Moving on. So yes, we're waiting for an ABC correction. So it's basically we're already about to do it. We've got an A in here, B corrective in where, and we're waiting for wave C. So it's kind of, we're ready to terminate in here. We can make an extension to the next level, but we're probably not gonna go higher than that. We've got no volume in here, which means we've got no demand. The only demand is bearish, and it's just the higher we go, the better prices will have to go short again. So I don't see that market making anything close to a reversal. So I think that's it for today. We're going to leave you guys on there. So euro dollar, I've been taking the gains, taking profits in here. I'm waiting for pullbacks in that blue area to just buy again. Just to be clear in here, that blue area is just a pitchfork. So I've just been taking this, this, and this. Okay, so I'm buying the lower boundaries of the pitchfork. As long as we don't make higher high and remaining there, as you can see, we've been reaching resistances on the euro. So this is the reason why I've been shorting EURJPY. It's just the market right now is just trying to short the GPY to prevent the market from going higher. But we've been overcoming the resistance. Oh, maybe not. Let me just see that. Make sure we haven't. That's problematic. We try to get there, so we might still be, there is a couple options in there. Option number one, this is an ABC correction, the one we've been forecasting before. Second option, this is already a wave 3 and we're just accumulating before outbursting, but as I said, we're going to need a catalyst out there, otherwise the yen probably going to be sold again because Wall Street doesn't want to have a bullish yen, because bullish yen means tensions, and tensions are not great to have low volatility. volatility. So we want to remain pressure on cover buyers, which will just buy yen. We don't want them to make money out there, otherwise they will take out the money from the equities, which we obviously don't want. We want the money to remain in the equities as long as possible. At least that's what Wall Street would like to, but as I said, we've been piling a lot of risks recently. At some point those risks might be showing up, but once again, I don't know. I'm no magician, so until we have true market catalysts to trade with, we just have to wait for the damn zombie to get back to life. Alright, that's it. So I'm going to take your questions right now. Now we're going to have to talk about the FTSE. So the FTSE is not doing well. It's just trying to make a pullback after breaking the lows in here. We haven't managed to hold those lows, but we're still bearish. So I think the market is just dead cat bouncing in here. Check out some pretty damn bearishness. So we'll see about that if that's the case. So interesting things to come with the GBP as well. I think the GBP is about to burst, and the equities are going to suffer from that bullish retracement on GBP USD. All right, so goodbye guys, and thanking the questions, and we're going to leave you with this. So English questions. Yes, thank you guys. If you want to thank me, just do it that way. If you absolutely want to thank me more than that, you can just send me some gift. As I said, once again, I don't want your money. The only money I agree to take is the one if you're using the indicator. If you're not using the indicators, once again, and want to thank me by sending me something, you can do it. Just ask for me. I'm going to give you my address, and you can send me something that worth something to you. Not money. I don't care about money, but I don't know if you are making some stuff by your own hands, something that has value to you. You can just send it out there, and I'll be pretty happy to receive it. So. This is French, but anyway, I look forward to this every morning. What will replace USD standard? Probably not the gold, not the Bitcoin, but probably an asset, crypto asset, imposed by the monetary fund, the IMF. I think the IMF is about to impose a cryptocurrency asset, probably using, I don't know what technology they'll use, even though if they want to use the Bitcoin or something like that, very less probable to me, but as an international transaction standard, I think the IMF is about to impose something at some point. But they're gonna need a crisis first. They're not gonna impose that right now. They'll wait for the crisis and say, okay, now it's enough with the dollar. We're gonna remove this one and use another thing instead. But we're gonna have a lot of things to validate first before getting in there. So don't be too many steps ahead of the market. Just 1 to 2 steps is more than enough. My plan now is to buy under 5K. Yes, I think that's the least we could do. If you want to buy Bitcoin, I think we're going to go lower. I can be wrong, but once again, as long as I haven't been proven wrong, I think I'm right. That's simple as that, and I'm going to stick with that. So, sorry to don't make this one a little bit longer today. I'm kind of getting sick, so I would like to try not to exhaust my throat and keep it on tight for tomorrow. So, goodbye guys, and see you later.